Robinhood is one of the biggest exchanges in the US that's known for their solid backing of Dogecoin. Right from time immemorial, even when other exchanges seem to not have any interest in Dogecoin, Robinhood has been there making a free trading platform for traders to enjoy buying and selling Dogecoin. Throughout the crazy run of Dogecoin in the first few months of the year, Robinhood was the exchange that enjoyed the most of the huge trading volume of Dogecoin that persisted as Dogecoin broke records after records. Today on Crypto Line, we'll be looking at what this crypto exchange released about Dogecoin in its latest news. If this is your first time on the channel, please consider hitting that subscribe button and turning on post notifications. Don't forget you can join our free Discord group via the link in the description for daily signals and a community of like-minded traders and investors. And now you can also support us on Patreon. We have several packages you can choose from according to your particular investment goals. And we have a special offer for our first 100 members, only $9.99 for VIP access on Discord, which gives you exclusive benefits far beyond the free features. Be sure to check out the links in the video description and in the pinned comment. We also have a special discount offer on Binance. You'll get 5% off every trade you make on the platform if you sign up with our promo link in the description. Robinhood enjoyed huge attention from traders and investors alike. Their website once had a bit of a crash in the fallout of SNL when traders opted to cash out of the sell-off that took place in the aftermath of Elon Musk's claim that Dogecoin is a hustle. Robinhood had great plans for Dogecoin, including the integration of personalized wallets for the users of the platform, thus keeping the traffic building up on their platform while also offering investors a bit more security in their investments. The latest news coming from Robinhood is something of an omen, and we're still processing what it could imply. Robinhood announced a few weeks ago that they would be going public, thereby following in the footsteps of Coinbase to become the second crypto exchange to go public. As they prepare to register in with the SEC, they've revealed that about 34% of their total profit is coming from Dogecoin transactions. This means that a substantial decline in the demand for the meme cryptocurrency could pose a risk to its business. This year has not just been profitable for investors, but for Robinhood as well, who've benefited from the high demand for Dogecoin. According to the S1 Securities Registration Form for initial public offerings filed with the SEC, the company said that a significant portion of its revenue in the first quarter of this year is due to high demand in Dogecoin transactions. There is a huge amount of trading activity that's enjoyed on the exchange with Bitcoin and Ethereum alongside Dogecoin. What we've seen is that Dogecoin transactions have trumped those of Bitcoin and Ethereum. This means Dogecoin is a hotspot of revenue for the top exchange. But that's only for the crypto aspect of the transactions holding on the exchange. Dogecoin has not just impacted the crypto industry, it means a lot for the progress of Robinhood. Observations of the company show that a huge contribution made by Dogecoin could actually pose a risk to the company. Hence, the company needs the transactions of Dogecoin to always be on a high. A decline in the transactions could mean a decrease in revenue for them. This would mean that a coin with equal potential to generate profit would have to be added to the platform. They said that without new demand for other cryptocurrencies available for trading on their platform, their business, financial condition, and results of operations could be adversely affected. They also noted that the crypto industry continues to evolve and change, and laws and regulations could also impact the business. They pointed out that bans and investigations here and there could cause damage to the business and ultimately the crypto industry in which they operate. Changes in laws and regulations, or the failure of Robinhood to comply with them, may negatively impact their ability to allow customers to buy, hold, and sell cryptocurrencies, and may significantly and adversely affect them. This is a warning to traders and holders alike on the platform. The integrity of the platform is questionable, as investments may be difficult to retract in the event of a crash in the price of the coin. This has already happened before in May, when the first huge sell-off that led to the dip in the price of Dogecoin from its all-time high at 72 cents. Robinhood users were unable to withdraw their holdings for a span of about a week. If they're implying that this could actually happen again, then investors should be wary and, if possible, opt for a much safer option. The crypto market is volatile, and a bearish market such as the current one could very well happen, and investors need to liquidate their investments for reinvestment at a lower price. Robinhood may have lost their safety factor right here. According to the revelations from the IPO, Robinhood is currently facing dozens of proposed class action lawsuits and investigations. The IPO filing also revealed that federal authorities seized the phone of its CEO Vlad Tenev as part of the GameStop trading probe. The company halted the trading of GameStop and other so-called meme stocks in January because it didn't have the capital required to cover the requested trading volume. Investors, as a result, filed lawsuits claiming that the action was unfair and unlawful. In the most recent price action for Dogecoin, its chart is caught up in a sideways movement that appears to be deadlocked at 20 cents, with waning excitement for the coin seeming to be on quite the low. The coin is trading on the average at 24 cents, which shows a 3% drop over the past week. Keeping Doge's past price actions in mind, the 3% drop can seem trivial, since the coin has grown over 10,000% since last year. The mutual interdependence of Dogecoin's price and social volumes has been dwindling since mid-May. In fact, the latter has remained mostly stagnant over the past few days. Additionally, when compared to the month of May, Dogecoin's social dominance has also drastically shrunk. All in all, social media has failed to provide the joke coin any relief. Dogecoin also withdrew itself from market-centric developments and prolonged its monotonous mood. The same became even more prominent after Coinbase's latest listing. In what was an unlikely scenario, this development failed to provide Doge any relief. According to this chart by AMP Crypto, Into the Block's data underlined that the market sentiment towards Doge was mostly bearish. Unsurprisingly, the average transaction size also showed a massive drop from about 1.6 million towards the beginning of June to 90,000. What's more, Doge's average balance also dropped from the 23,000 range in May to the 7,000 range. Its trade volumes didn't reflect any impressive figures either. While Dogecoin may have been a good Samaritan for its investors of late, it hasn't been doing too well. The question now surrounds whether with Q1 already over, are Dogecoin's high-performance days a thing of the past too? Over the past week, Elon Musk tweeted an image from The Godfather captioning the meme "Release the Doge," which led to a spike in the value of the coin. The impact was not so significant as the market response for Dogecoin has been only at a positive 10% increase below the last time Mr. Musk has mentioned the cryptocurrency on Twitter. Back in April, a flurry of posts by Elon Musk saw Dogecoin quadruple in price in just 24 hours, pushing it to new record highs above 40 cents. Then it surged about 80% to peak above 70 cents on May 8th. Early June saw the coin hit a 15% growth to briefly test the 40 cents price level following a lengthy 14 days crash before seeming stagnant at around 20 cents. As observed in this chart, Dogecoin is lying just below the resistance zone between 25 and 30 cents following a falling trend line that's now touching the head of the candle at 24 cents. The price trend seems to be attempting to break above the trend line and into the range above. We could see a rise to about 28 cents and maybe a break above the zone to 30 cents in the short term. Notably, there is a lower price support zone to which the coin might tentatively fall to in the case of another round of sell-offs. The coin could fall to 10 cents below the liquidity zone, although it would provide a good buy-in price for those looking to maximize the dip. Thanks for watching today's video. If you enjoyed it, please consider subscribing to the channel and turning on post notifications. Remember to check out our Patreon via the link in the description and join our free Discord group, also links in the description. If you have any questions or comments, let us know in the comments section, and be sure to check out some of our previous videos as well. And as always, good luck and happy investing.
Hollywood Carson. That's how it goes. Hollywood Carson.